invest in and follow principles. That has proved to be pretty successful.
This landlord's gonna make almost $2 million over the next 12 years for doing something one time. And that's like residual. This guy's got another 7 retail spaces and he's got 10 stories of apartments above it. And I'm like, man, I'm on the wrong side of the coin, right? I need to own real estate, not broker it.
You start doing deals that are absolutely life-changing, like that put you on the path for intergenerational wealth.
Welcome to the Real Estate HomeRuns podcast. I am your host, Louis Van der Horst. This is a podcast for busy professionals who want to learn about passive income producing strategies that have helped others crush it in the real estate world. Whether you are a new or seasoned real estate investor, this is the podcast for you.
Hello, and welcome to the Real Estate HomeRuns podcast. Today, we are excited to have Loren Jacobs as our guest. Loren has a unique pre-real estate background, graduating with a master's degree in neuromuscular physiology and working in stem cell research for 4 years before transitioning to real estate investing full-time. Loren is a real estate operations leader at Arrows Capital Group, a real estate investment company aimed at serving residents, communities, and investors. He is also a fifth-generation real estate professional with experience operating single-family, commercial retail, small business, new development, and multifamily syndication. He currently has an equitable interest in 400-plus multifamily units. He and his wife have also started and acquired multiple small businesses. His passions include spending time with his wife, raising his 2 children, giving back through local charities and humanitarian work, as well as any type of sport-related activity. We are so excited to have him join us on the podcast today, and we hope that you enjoy this episode.
Today we have a special guest, Loren Jacobs from Arrows Capital Group. Loren, thank you for joining us.
Louis, man, thank you so much for having me here. Super excited to be here, and let's add as much value as possible to your listeners today.
Yeah, I think it's going to be good just reading your background and getting to connect with you a little more before this. I think it's going to be a really good episode. So you went from a W-2 job to now doing real estate full time. What was that process like for you and just wrapping your mind and getting ready to doing this full time?
I could give you the long answer, or I could give you the short answer. That's a loaded question. How far back do we want to go? I'll start with a little bit of, kind of how I got into the position of thinking about real estate and multifamily, and ultimately how that landed me at, being able to hang the hat on the W-2 and pursue real estate investing full time. It all really started back. I was going to be the 5th generation of a real estate professional, right? My great-great-grandpa had started a real estate brokerage. My great-grandpa, took it over. He added on a lending branch. My grandpa took it over. He added in an escrow division. And my mom is involved managing broker, and she's added in a property management division. So I come from a long line of real estate, right? That's part of a superpower, I guess, is a lot of experience and expertise to pull from there. Initially, what was really interesting is they were all, of course, agents as well as investors, agents and brokers. And that's what I saw growing up. I saw my mom and my grandpa there on the phone, emailing all the time on the cell phones when, cell phones became a thing, because I was born in a day before cell phones were a thing. And, home late, out early. And all of a sudden, I kind of shied away initially from real estate. And I started on a more traditional path, went to college, got a couple degrees, got a job. And, it was fun. It was rewarding. I came out of school. I started working in stem cell research for a couple years, about 3 years. And it was great. I loved it. I loved the people. There was a pretty low ceiling, and it didn't check all the boxes. So I thought, how do we change this dynamic so that I live a life that is more fulfilling? And it does check all the boxes. It gives us everything that I want for my family and myself. Along the way, I met my incredible wife. We have 2 children, a 1-year-old girl and a 4-year-old boy. And I mean, we'll get into talking about goals and talking about your why and all that stuff. And those are the drivers. That's the driving force behind whatever you do. And those things need to be strong and delineated and, written down and looked at every day. Absolutely pivotal to what I've been able to do. And, that's the foundation of the why right there, the family, the kids, and the life we're pursuing and we want to live. So that led me to changing gears. And I thought maybe if I shift over to a different W-2, that might check all the boxes. That might give us the answers we're looking for. And surprisingly, it did. So then we really took a step back and thought, okay, what can we do to really pursue the life of our dreams, to achieve our goals, and to get that? Really, we were after that freedom, that time freedom. A lot of people talk about financial freedom, and it does take some degree of financial freedom to gain time freedom. But really, our end goal is that time freedom. How can we design the lifestyle we want to live and have that time freedom to do the things we want to do, to spend that time with our family, instill spend the time with our kids that we need to instill the morals and values and principles that, we want them to have to be successful, to live the life they want to. How do we design that life, right? So I went back and did a ton of research, right? We doubled down on self-help books, podcasts, online, Bigger Pockets, other online forums and groups around real estate. My wife and I started picking up some single family rentals, and, that was going well. We would do a live and flip, move, hold on to our old place, rent it out. We did some, flip and holds, kind of like the Burr strategy, if you're familiar with that. And that was going well, but it would take a while. It took a long time, 6 months, a year, to save up enough money for us, at least, to go buy another one and do it again. We bought a small business, we bought a commercial retail space. And so we were diversifying, and we were doing all the things that we were supposed to be doing. It just wasn't getting us as far ahead as we wanted to, as quickly as we wanted to. So again, back to the drawing board. How do we get there? How do we get there faster? And I listened to a podcast, and this is where, the real epiphany happened. This is where the light bulb came off. I was listening to a podcast, and it was actually Rod Khleif. If you're familiar with Rod Khleif, it was one of his podcasts. He's got a great podcast.
He does.
And what he said real estate takes money, but it does not have to be your money. And I thought, wow, man, that's everything I needed to hear. I don't have all the money to go buy a bunch of real estate to produce the cash flow that I need to quit my job, but other people do. And, I would much rather own a portion of a cash flowing asset than none, 0% of a cash flowing asset. And so then we started down that rabbit hole, and eventually that led to multifamily and multifamily syndication. I joined a coaching program, and that was about a year and a half ago. Over the past year and a half, we've closed on 3 syndications. We've done a JV deal, and, we're under contract on multiple deals right now. And, this past January, all of that stuff was, everything from the single families to the businesses we've acquired, to now large multifamily syndications, combined has given us enough cash flow to transition from the day job to now being, having that time freedom, being a full-time real estate investor. I think that was the long answer, but
no, that's really good. Just to see the big picture from your great grandparents and seeing that unfold into what that looks like for you and your wife, because your why is different than your grandparents and your grandparents' parents. And I'm sure over time that's also going to evolve some more, but it's your why. No one has the same why as you. So that's good.
I'm not interested in selling real estate to somebody else or helping someone else buy real estate. I'm interested in buying real estate, and I don't need a license for that. And I'm actually held less liable because of that. So I don't plan on getting a license.
That seems to be a common misconception that I see among my peer friends that are in real estate, that you need a license to be involved in real estate. And it's like, no, you don't. You can still be involved in deals and buying or selling with.
Absolutely. And it could be a great option for a real estate investor if you also plan on, buying and selling real estate for another source of income, albeit active income. But if you're just planning on purchasing and investing in real estate, I would not recommend a real estate license. You don't need it. And, again, we can get into some of the other things, but it's just not necessary, plain and simple.
So let's talk about using other people's money. What are some strategies that have helped you be able to confidently approach potential lender and show them the numbers and explain to them why this is a great opportunity for them?
That's a great question. I mean, OPM, other people's money, is so powerful. That's part of the reason why real estate is such an incredible investment, because you're using the bank's money typically to, you're leveraging the bank's money 70, 75, 80%. If you're a first-time home buyer, maybe up to like 95% or more. In some cases, you're leveraging someone else's money to own a large piece of real estate. I mean, I could put $3,500 down in some cases and own $100,000 of real estate. I mean, that's powerful. And so now, let's take that to a larger scale. Maybe I need 3.5 for an extreme example. Maybe I need $2 million or $2.5 million to own a $10 million asset. And I don't have $2.5 million in the bank, but other people do. And perhaps I can present them with an opportunity to where we can own a $10 million asset together and all reap the rewards, right? So first of all, this is going to be partially a little more of a generic answer, but you can't go start asking other people for money if you don't intimately understand what you're doing in the industry, right? So the first thing is just, you have to be educated. People invest with people they like and they trust, right? People also invest in things that seem simple. If you overcomplicate something, the answer is going to be no. If you do not have an intimate understanding and a strong educational background in the subject matter, you will not be able to simply articulate the investment offering, right? So number one, go read all the books, go listen, download all the podcasts, hear all your podcast episodes, all the real estate information you can absorb. Go absorb it. You don't need to join a coaching program. It sped my trajectory up immensely, lightning speed. You don't have to do. Number one, go get educated, understand the subject matter. If you're doing single family stuff, understand that. Small multifamily, understand your niche, understand the ins and outs of raising money. There's a lot of legalities around raising capital. Are you going to partner up with one other person who's bringing the money to the deal, a JV structure? Well, you need to understand the legalities around forming a partnership. You need to I would recommend having a strong operating agreement in place, delineating exactly who has what role and what happens if there's a disagreement, et cetera. Outline everything. I've unfortunately been in a bad partnership and we did not have a strong operating agreement, and it was, we got out of it and everything's fine. It could have been a lot worse. And that just opened my eyes to, wow, seems all rosy until it's not, and it can become not rosy pretty quick. So just be careful about who you're partnering with. That it sounds great, but the first person to come along and say, hey, I have $100,000 or $1 million to invest with you, it doesn't mean that they're a great business partner. So do your homework, take in serious consideration who you're partnering with and make sure it's the right fit. Also back that up, no matter who it is, if it's your best friend from high school, or if it's somebody you just met, back that up with a strong operating agreement. Next, there are further legalities around raising money and using other people's money. How are you structuring it? Is it a joint venture? Is it a syndication? The difference is a joint venture, every partner has to be active. There are no passive partners in a joint venture partnership. If somebody wants to give you money and be a passive investor, then you need to syndicate. You can syndicate. There can be two partners. There can be two people in a syndication. That's okay. And, people hear syndication and they think it's this big, scary, different thing. It's not. You drop some extra paperwork, it's going to be an extra, depending on the syndication, it can be an extra $10,000 or $20,000 for upfront legal work, but it's nothing scary to scare you away. If it's a great deal, that's just a cost of the deal. That's the cost of doing business. Set it up properly. Don't chintz out on the legalities, and don't try and get around the bush of not doing something the way you should, because it can bite you and it will not be worth it. That's the biggest thing, man. Really understand what you're doing, understand the legalities around raising money. And now that you have that a little bit of experience, you've got some education, now you can go approach potential investors with confidence. You will come off as competent and educated, and you can simplify and clearly explain, the investment offering. And now you've positioned yourself to best be able to raise the money you were seeking for, the investment opportunity that you've acquired.
Just keeping all of those things in mind and going to the operating agreement, setting that up in place since the beginning so everybody's on the same page. There are no surprises later. And if and when they come up, be able to address them.
Yeah, that's so important. Ask all the hard questions up front. Make sure that, one, you need to be in a partnership. Maybe whatever you're doing, you don't actually need to be in a partnership. You don't need to form a company around it. Maybe you do. So anyways, get educated on all of those things. Ask those hard questions to a potential partner up front, and get a strong operating agreement in place if it's necessary.
Would you mind sharing about how you structure perhaps one of those syndication deals or any other deals that you have been part of, from like how do you guys fund it to management, operations?
Yeah, absolutely. Of course. I'll first start at, a lot of people asking this, how do you get your foot in the door in that first syndication, right? And then we'll get into a little bit of, how it's structured and the operational aspects after, you just get your foot in the door and get under contract and away you go. The first part, again, we don't get all into that again, but the first step is, one, you have to know the subject matter. If you've got a great deal you want to syndicate, Lewis, and you come to me and say, hey, Loren, I've got this great deal, can you help me put it together? And you start asking me some questions about how I can help. And I don't know the lingo. I don't know the jargon. I don't have any idea what I'm talking about multifamily real estate. You're going to be like, maybe this isn't the partner for me. I'm going to go with somebody else who's got a little more experience and can actually bring value to the team. That education is, I don't want to beat a dead horse. So it's the foundation of everything, and it's never ending for you. It's for everybody listening. It's never ending. So number one, be educated. Number two, there are only a few pieces where you can add value onto a team as someone who's going to come in as a newcomer into multifamily, into syndications. One would be finding a deal. Acquisitions, are you out there calling brokers, mailing owners, cold calling sellers? Are you putting in the work to go find that next deal? And do you have the ability to analyze it and make sure it's a real deal, right? That's number one. Acquisitions and underwriting, and those can be two different pieces. I just put them in the same bucket. Finding a deal is the most valuable thing you can do to operator or syndicator, somebody that can help you close a deal, right? Number two would be raising money. For every deal that we have, we need to raise money from passive investors, which is, why we're syndicating. It could be $500,000. At that point, you could probably easily joint venture that, find one or two other partners with the money to come in and be active. Maybe it's $1 million, maybe it's a $5 million, $10 million raise to syndicate this deal. Whatever it may be, you're going to need money at the table, right? Typically, the sponsors or the general partners, the active partners, put in some of that capital raise. They have skin in the game. How do you start to reach out to those passive investors? Well, you need somebody who has that skill set, right? You need a capital raiser on the team. So now, Luis, let's say you have a really great network of high net worth individuals. You reach out to them, tell them what you're doing. You can raise $500,000 or $1 million. Great. That's another piece of value that can get your foot in the door on that first syndication deal, on that first large multifamily deal. The third way this could happen is if you've got the net worth. You've got the balance sheet to throw around and help satisfy the lending requirements to secure financing for that opportunity. Typically, in the syndication world, you will need a cumulative net worth of 100% of the principal loan amount. So let's say we're buying a $10 million deal. We're going to get 75% of that from the bank. So we need $7.5 million or more in combined net worth on the GP team. So if you have a $5 million net worth, that's really valuable. You can come check off a big chunk of that $7.5 million net worth requirement. And liquidity, typically the bank is going to require X amount of liquidity post-closing. That could be 10%, that could be 9 or 12 months principal and interest. If you have that net worth and liquidity, that's very valuable. So really, those are the three ways, in my opinion, the most likely ways that somebody could get that foot in the door on that first deal. Find a deal, raise money for a deal, or have the net worth to help satisfy lending requirements for a deal. Most common are going to be number one and two, finding the deal and or raising money, or a combination of both. So the next step is to identify what your value add piece is going to be. What's your value prop, your value proposition? Number 3, refine that value prop, right? Get really good at finding deals, get really good at raising money, and get, $1 million of soft commitments. And now number 4 is going to be to communicate that value prop with everybody you meet, everybody that'll listen, especially everybody who that's syndicating multifamily apartments. Tell everybody, say, hey, here's what I can do. Here's how I can bring you value. What are you looking for? What are your criteria? Okay, I'll input that in my DTS, my direct to seller system. I'll communicate that with the brokers I'm in contact with, and I'll start looking for deals that match your criteria. And when I find one, I'll bring it to you. We'll close on it together. Or, you tell everybody, hey, I can raise $1 million for your next, I can raise $1 million confidently. I know that because I have, 16 people who have each told me they will, can put $100,000 into this type of sample deal that I've showed them. And so now, you've communicated that, you're going to stay in touch with them, follow up, you're going to continue to refine and enhance your ability to, towards your value prop. And eventually you're going to get your foot in the door on that next deal, because syndicators always need deals and they always need money for their deals.
That's good. And there are a lot of people that are like, you know what, I want to get in it in multifamily syndications, but I don't have the time. Okay, you don't have the time, but do you have the funds, or could you find the funds? It just goes from there.
Yeah, I'm sorry to interrupt, Louis, but I would challenge that. You do have the time. You just need to prioritize and create the time. There are people out there who are far busier than I was, but at one point in time, I was working 60, 70 hours a week, 12-hour night shifts. I was working weekends. I still created time to put in, 15 or 20 hours a week into this multifamily stuff. And ultimately, and I had a family at the time. I spent time with the family. I prioritized sleep less than I should have, but something's got to give. And I knew that at some point that could help transition into, where we are now. You have the time. You can prioritize the time. If you need the help, I'd be happy to help. Send me a detailed, schedule, itinerary of your weekly schedule, and we will find you time. Because we all have time. That is, I heard a really good quote. I'm going to share that with you today. A really good quote. I actually just heard it yesterday, but I love it. I said, those that are great at making excuses typically are great at nothing else. So, you can create any excuse in the world, or you can decide to bust through that excuse and create a solution. If you want to be great at anything, I would recommend the latter. But yes, you also asked, operationally, a little more of the granular details about, what does a syndication look like? And so I'll kind of share that a little quickly too. Typically, once you get under contract on a deal, you put your team together before the contract, or maybe just after the contract. Again, of course, you're going to want the person who found the deal. If they want to be a part of the deal, maybe they just want a finder's fee. Maybe they want a wholesale fee. That's fine. That's great. Maybe they want to be a part of the deal. Great. You're going to need a KP, a key principal. You're going to need somebody who can satisfy, or maybe multiple people who can satisfy the lending requirements that we talked about. You're going to need one person who can, or maybe multiple people who can raise the money necessary to close on the deal. Somebody is going to have to be good at the operations post-closing. Who's the asset manager? Who's going to look over the property manager, making sure they're doing everything that we want them to be doing? Who's going to make sure that our business plan is executed? Who's going to do the due diligence? Who's going to go on site and walk all the units? Who's going to, do all the behind the scenes work to get the lending set up, to get the, title work set up, all the legal syndication docs and everything set up? Who's going to put up the earnest money deposit, the, legal deposit, lending deposit? Who's going to pay for the inspections? Those are all things that need to be covered. And most of the time, general partners will wear multiple hats, right? Maybe someone who found the deal will also help raise money, and the KP will also help raise money. Maybe you'll have an asset manager who can, help with due diligence and put up earnest money and all that stuff. But you need to make sure all those boxes are checked by the team that's in place, right? So assemble the best possible team. You get through your due diligence. Your physical inspections will come first. You will walk every unit, make sure everything looks okay. Bring your property manager with you. They'll walk every unit, make an inspection report unit by unit, get your financing in order. You'll start raising money. And, what that looks like is, typically we'll put together an OM, an investor operating memorandum or offering. It could be in the form of a flyer, could be a slide deck, could be however you want to present that. Could be a webinar. How are you going to pitch the deal to investors? And now the team is going to go out and raise money for the deal. You're going to bring the money in. Your investors will sign subscription documents and agreements and PPM, and then they'll wire their money into an escrow account. And that's the money you're going to use to close the deal and use for your business plan, use it to remodel unit, whatever capital improvements you plan to do. And, your financing comes through, you close on the property, and now the fun really starts, because now you've got to operate and manage the property for the next, 3, 5, 10 years, whatever your plan is. That's a short and sweet version, but it's not that much different than closing on a single family property. It's all the same things. It's just on a much larger scale, and there's more people involved, and you're raising more money typically. There's a few more legalities to jump through around the raising the money part. Beyond that, man, people get all psyched out about syndications, and it's nothing different. The only difference is you own a much larger asset. There's a lot more cash flow, and you're just sharing it with more people.
I think you did a great job explaining it and letting people know, it's really simple. It's just more units, and those, you have different partners involved, but it's doable.
Absolutely, 100%. And there's a lot of people out there doing it, so it's very doable. I mean, if myself and a lot of the other people out there can figure it out and do it, so can anybody else. But again, you've got to set that as a priority. You have to create an action plan of how are you going to make that happen. Set your goals, set your process goals, make an action plan, and bust through any limiting beliefs, bust through any excuses that you're creating you can do it if you set your mind to it. Absolutely.
So what's the next big thing for you, or what are you looking forward to?
Thank you, man. I really appreciate that. That's always a really interesting question. There's a lot. We want to own thousands. I don't want to own 1,000 units and hang up the hat and say we're comfortable. The vision's a lot larger than that. We want to own thousands of units, 5, 10, 20,000 units looking into the future. We want to own a lot of the businesses that live on the expense end of those assets. I mean, you're owning and running a business, so your monetization is growing there, your cash flow is growing there. But you also have a lot of control now over the margins within your multifamily assets, because you own the landscaping company, you own the HVAC company, you own the companies that you were contracting to do the work, to maintain, upkeep, and renovate the asset. Another big thing, we're talking about a lot of the mechanics here. The biggest motivation for what we're doing, and really why we decided to get into multifamily, is because you have, as a landlord, whether it's single family or a 300 unit apartment community, you have this incredible opportunity to have such an impact on other people's lives, because you have really significant control over their home, right? What they call home, where they spend the majority of their time, for most of us. And, you can create that, you can create an excellent experience for them and offer them a lot of opportunities if you get a little creative, or you can create a really horrible experience for somebody. And there are a ton of great operators out there really focusing and doing good work on prioritizing people and the experiences that they have in their homes. There are other operators that don't. And, we're here to really help bridge the gap. And you can be people centric. You can prioritize people and put people first and still offer good returns, still have great profits. You don't have to look at those two separately. And I think there's a divide between a lot of people and how they view these investment opportunities. A lot of times we get stuck in the spreadsheets and the returns and the numbers, right? And well, if I renovate a few more units, I can increase my returns by X. If I raise rents by another $50, et cetera, et cetera. And what we forget, and I live in the spreadsheets. That's kind of how where my value came from starting out. And, it's easy to forget that we're talking about real people and real lives and their children's lives. And, the ability to separate yourself from, the 2D spreadsheet and get out into the 3D world and look at these families and say, okay, what are some problems that we're really seeing here? What are some ways that we can add value to the people? How can we create a tremendous experience and positively impact and enrich these people's lives, as well as, how can we create efficiencies and build a better performing asset, and so those are questions that we're asking ourselves daily, and making sure we're focusing on people and actually making that the priority. Also making sure that doesn't mean just the resident base, the people are the investors. How do we not just take their money and give them a return? How do we create an experience for them? How do we create something that's a lot more than a return on their investment? How do we give them a return on the impact that we're making, more of an immeasurable return? How do we make them part of that? I know you asked what's next. I mean, that's going on right now, but that's the goal. That's, again, we talked about goals and whys. That's why I don't want to stop at 500 or 1,000 units. That's why we want to get to 10 or 20,000 units, because now we can have 10x or 20x or 100x the impact on, more people's lives.
That's good. And I'm assuming education is one of them, getting educated. Are there any other principles, maybe two, that you can mention that have helped you in your business be able to hit singles or doubles or home runs?
Absolutely. Yes. You nailed the nail on the head with the hammer. That was absolutely read my mind. Education, but we won't get into that again. Network, your network is huge. Who do you spend time with? Who is in that inner circle? Who are you exposed to day in and day out? Those people have a tremendous impact on your life and who you are. Are they the right people right now? I mean, take a step back and analyze the 5 people that you're closest with. I believe Jim Rohn said, you are the average of the 5 people you spend the most time with. Absolutely true. Who are those 5 people for you? Are those 5 people pushing you and encouraging you and helping you grow and progress into who you want to be and where you want to go? If not, you need to replace some of those 5 people until they are. That doesn't mean they're bad people. That doesn't mean that you can't be cordial and friendly with them. That just means that they're not somebody you should be exposing the majority of your time to, right? Because unless that's just who and where you want to be for the rest of your life. But then, getting beyond that inner circle, who are you networking with? What does your network include? We've all heard the phrase, your net worth, or your network equals your net worth. And I've really come to really respect that, because it's absolutely true. Until I joined a coaching program, essentially I paid money to be in a niche network of people who are doing what I want to do and going where I want to be, or are already there. That set me far apart from where I would have been otherwise. Making sure that you're in those networks, you're in those groups, you're in those masterminds, you're surrounding yourself with people who are doing what you want to do and going where you want to go. So network and education. If you ask for 2, those are the 2 biggest things. If I'll add one more, we touched on it a little bit. It's just identifying when you have some negative self-talk, or, self-identifying when you're making excuses, identifying when you have limiting beliefs, and, crushing through those, getting uncomfortable and crushing through those obstacles are really what's going to allow you to be successful.
How would people be able to stay in contact with you if they want to learn about what you're up to, what kind of deals you're doing?
Yeah, absolutely. I'd love to help out however I can. We're here, actually, in our mission statement is increasing the potential success of others, as part of our mission statement. So I'm truly passionate about helping other people. I've had a tremendous amount of help to get where I am, and never would be here without it. Yep. And just love the opportunity to be able to pay that forward. To answer your question, you can reach me at Loren@arrowscapitalgroup.com. Just find me at arrowscapitalgroup.com. I'm on Facebook, Loren Jacobs. I'm fresh to the Instagram world. I jumped on the Insta bandwagon.
And the hashtags.
Oh yeah, I'm working on it, man. I'm working on it. My Instagram handle is Loren Jacobs Invests. Reach out to me anytime. Feel free to email me, find me on Facebook, ask me some questions, let me know how I can help. And I'd love to help everybody, get a little closer to achieving their goals and to, be more successful in whatever they want to do.
Hey, thank you so much for your time, Loren. I think this was super informative, and I feel like you did a great job simplifying everything, and my audience got a lot of value out of this.
Thank you, man. I really appreciate that. I really appreciate the opportunity to be here, Lewis. Man, you're doing a great job, and super excited to follow up with you and see where we'll all be in another year from now, because we're all going big places, man, and I just appreciate the opportunity to be here. So thank you.
It's my pleasure.
We hope you enjoyed this interview and got some value out of it to help you in your real estate investing journey. If you can take just a minute, please do us a favor and leave a review. Hit the like button on iTunes or whatever platform you listen to our podcast on, and subscribe so you can hear future episodes. Also, don't forget to check out our Real Estate Home Runs Podcast Community Facebook group, where you are able to connect with some great listeners. If you're an investor who is crushing it and want to share some information centered around passive income in real estate, please contact us. Hit those home runs, and we will see you next time.